The biggest thing we want to focus on for American National and for my agency, for our clients, is we want to make sure your coverages are correct. A quick story, I've only been in the insurance business for 6.5 years. I was in banking for about 12 before that. But a couple years ago with the Easter tornadoes that came through, of course we all remember where we were when all those situations took place. The day after the tornado, a bunch of groups from churches piled up in trucks, got chainsaws, and went to go help and see what we could do to help. And I'll never forget, we went to Holly Hills in East Brainerd, which is one of the areas that got hit the hardest. Of course, just looked like a bomb had went off in that whole area. And so we were cutting down trees, moving brush, just doing what we could to help the people that were there. And I'll never forget when someone found out that I was an insurance guy. I was all of a sudden popular, not for my chainsaw or for any of the work that I was doing, but they needed help finding out what they had. So I go into this house. I'll never forget. It's probably a $350,000 to $400,000 house, used to be, and the second floor of it is gone. The tornado completely took it away. And I'll never forget walking in that house with the homeowner. We walked into his office that was on the first floor of the house. And again, we're standing in sunshine because the second floor of the house is gone. And we're in his office. He opens his filing cabinet because everyone has the insurance file folder. It's in a desk in an office. It's in the kitchen. Whoever it is, you get your homeowner's policy and your auto policy. You throw it in that folder or that binder or wherever it is. And you've got it, but you don't know what's in it. But he pulled out his homeowner's policy, and this $400,000 house was insured for $165,000.
Wow.
Because the law says the insurance coverage only has to cover the loan amount for the property. So the mortgage was paid down pretty substantially because they'd been there for a while. However, their insurance coverage was just not right. And the problem was that the homeowner, not their fault, but they had signed the application, they had signed all the paperwork because they had trusted that their insurance agent and their loan originator who had done their refinance had done it correctly, and they hadn't. And so it was too late to do anything about it. And so they settled. They were able to basically bulldoze the house and had to start from scratch.
And go back and do it.
Exactly right, yeah.
Okay. Well, now, do you offer any kind of, insurance for a family that has young drivers and...
Sure.
Okay.
Yeah, the dreaded 16-year-old driver. Every time I do a quote or do a review for folks with a younger driver, I just apologize up front because it does hurt, but it's just because they're a higher risk classification and they have more accidents, which cause more problems. But American National and all insurance companies, for the most part, home and auto insurance pretty much is what it is. You have a wreck, your car insurance takes care of you. You have a claim on your home, most of the time your homeowner's policy is going to take care of you and do it correctly. So what I like to try to do is focus on what American National does differently, focus what our agency does different, because you don't want to have the first interactions with your insurance agent to be after there's a problem. So I try to get to know my clients on the front end, have a good rapport with them, sit down at their coffee table, sit at their kitchen table, talk through what they've got, why they've got it, and make sure it's correct. And then, again, talk about the differences that American National and our agency offers. A few of those differences, and the biggest ones, and really and truly some of the ones that brought me to American National, the first thing is what is called our cashback program. There are a lot of companies that have different types of programs where you can get discounts or some sort of a reduction in your premium by doing this, or plugging something into your car, or having an app that you have to sync to your phone, that syncs to your laptop, that syncs to your tablet, and all those crazy things that it's not going to work, but it sounds good on TV commercials. But American National, if you have your home and your cars with us, the day that you start coverage with us with those two policies starts a 3-year waiting period. In those 3 years, you pay your bill correctly and you go claim free. That's all you have to do. Go claim free and pay your bill. Every year following that 3rd year that you continue paying your bill correctly and continue going claim free, American National will give you back 25% of all of your home and auto premium back to you each year that you continue doing that. The way it works is your 4th year that you're with us, we give you back 25% of everything you paid from your first year. The 5th year is 25% of everything you paid from your 2nd year. So it's a 3-year look back period, basically. So simple math, because I'm not good at math sometimes. Let's say you pay $1,000 for your homeowner's policy and $3,000 a year for your car insurance, which is $1,500 every 6 months, which is pretty average. So $4,000 for simple math for Michael today. $4,000 a year for your annual premiums, 25% of that is $1,000 that we would give you back just for doing what most people normally do, which is pay their bill and go claim free. So, like I said, I've been with American National for 6.5 years. I've been an agent and a client. So every June is just how it fell on my calendar when I wrote my policies for myself. But every June so far, knock on wood, my family has gone claim free and we paid our bill correctly. So we've gotten back $850, $830, and $915 worth of cashback checks just for doing, again, what folks normally do, which is pay their bill and go claim free.
Okay, so if you did have to have a claim, it would start all over again once.
So you have, if you have a claim,
over.
yeah, you have a claim, that cashback clock resets. So it doesn't go away forever, but you wait the 3-year period and then it kicks back in again for you.
Okay, sounds like a good incentive.
Yeah, well, like I said, it's just one of those things. I like simple, so you don't plug something into your car where Big Brother's watching you drive. You don't have to have all these other things. It's claim free and pay your bill. So it's very, very simple.
One of the questions is if you have, like a car accident, and then you don't file a claim, you let the other guy file a claim, would that go against you?
So that's a great question. I'm glad you asked. There a lot of folks, when I ask them what type of coverages they have, the favorite answer and the one that I get the most is I have full coverage. That's great, but that's not what I asked. There are what are called limits of liability coverage when you talk about your car insurance that determine how much coverage you actually have if there's a situation where you are at fault in a wreck. Now, what you said, if you get hit, someone hits you, it's the other driver's fault, that's on their insurance to take care of you, and that does not hurt your cashback status at all. So, like I said, that's all on the other insurance company to get your car fixed or replace it, rental car, all of those things that come with it. But as far as making sure that your coverages are where they need to be when you have a wreck that is your fault, that's when the limits of liability really matter. And the full coverage, you may have that full coverage where your car may be replaced or repaired, but when you deal with situations where the other folks in the other car are injured, where there's medical expenses that are involved, litigation that happens, you can't drive down a major highway in this area or road and you see a billboard that says, "You've been hurt in a wreck, call me for a check." That happens every day. Another reason why the insurance premiums are where they're at, what's one of the mitigating factors, because people are sue happy. All of a sudden their back hurts, their neck hurts from getting rear-ended, and it all kind of plays into that.
I was just sitting there thinking, and I kind of lost my train of thoughts. With the values of housing going up, are you adjusting those to meet the...
Yeah, that's a great, you mentioned earlier why it's important to know your agent and have a review. With the market the way it is, with the housing, I mean, just, going crazy with valuations and values, you don't want to be in a situation where your house 5 years ago when you moved into it was worth $150,000. Well, now it's worth $240,000 because of just the property valuations. Right. So when you're exactly right when you're talking about total loss scenarios, which aren't fun to think about, but as we know with the tornado watch that happens every other week in this area, it happens, and it'll never happen to you until it does. And it's one of those things where you'd rather know what you have and why you have it beforehand, so you're not trying to pick up the pieces afterwards. Yeah,
because I was just thinking, your tax bill goes up every year, then your property value seems to increase, then you need to have that, that increase. And most insurance companies will give some sort of a range of an increase as far as the coverage amount year over year, just inflation and just
cost of things going up. But when it spikes the way it has over the last few years, the increase that most companies do typically aren't enough. And again, that's based on you get your policy in the mail like everyone does and actually looking at it, instead of most folks that I talk to have their, again, it's a big folder that comes from your insurance company. They don't open it. Because with a homeowner's policy, it's typically escrowed, which means your mortgage payment takes care of your homeowner's insurance. Your car insurance, 9 times out of 10, is a monthly draft out of your checking account. It doesn't change dramatically normally during renewals, so it may vary $5 to $10 to $15 difference as far as renewals are concerned most of the time. So if you don't have someone who knows what they're looking at and knows why they're looking at different things, that's why having a review is so important.
Under homeowners, what about your interior, your like jewelry or anything like that?
Sure.
Is it important as you accumulate more to look at that, to see what your values are? Because when you start out at young, you probably don't have as much as you do when you're 50
Absolutely.
or 60.
And several years ago, at the Gateway Mall here in Fort Oglethorpe, there was a big gun show, and they have one every so often there as well. But I did a table, a booth, I guess you'd call it, at a gun show. And we have some firearms I've collected over the years, those sort of things. And some of the more high dollar weapons that we have, I had a table set up, and I had 5 weapons at the table that were expensive and were valuable. And as people would walk by my table, of course, the nice weapons at the table would kind of draw them in because they wanted to look at them, and they were neat looking. And I said, so if you have a fire, or if someone comes in and gets in your gun safe and takes all these guns away, your homeowner's policy as it sits, unless it's notated differently, you could have one of these 5 or 6 guns back with your current policy. Which one would you get back, and which one would you let all the rest of them go? So that's the same with firearms, with jewelry. There are limits of insurance for different parts of your personal property in your policy. And again, that's in that big chunk of paperwork that no one reads until after the fact, when you're trying to pick up the pieces of a fire or a tornado or a theft or whatever. One of the checklist items that I have all of my clients do, or I tell them to do it, I can't go to their house and make them. But as soon as we write a homeowner's policy for a client and they're in their home, I always jokingly say, when is your house the cleanest? Around holidays, when people are visiting or spring cleaning or whatever the case may be. But get your cell phone, go to a panoramic picture, which is the one that does the wide angle. Go in every room and take a panoramic picture of every room of your house. If you have a tornado, if you have a theft, if you have a fire, whatever the situation may be, where you have to deal with an adjuster in making you whole again after a situation like that, you think you're going to know what you have, and you're going to remember every little knick-knack and detail that you've got. You're not. It's a traumatic situation. It's a very, very, it's a sad place to be, especially when you're trying to remember all these things and you can't. So having that panoramic picture of every bedroom, you save it on the cloud so it's not tied to just your phone or whatever, but when you can pull that, you can say, here was my 60-inch Samsung television. An adjuster can't argue with the picture of a 60-inch television hanging on the wall. Here's this art, here's this fire, whatever the case may be. So that's where that's so important.
Yeah, I've heard that over the years, to be sure that you had pictures, but then I thought, well, you could lose those too. But
yeah, picture like the Polaroid pictures where they pull them out and you flap them in the wind and you can lose those. But if you put them in the cloud with the panoramic picture on your phone or computer, it makes a difference. But I had a client who had an electrical situation in their house, an older home. Electrical situation shorted out. Thankfully, they were out of town, but the house burned down to basically nothing. And we had their home insured for a couple years. And like I said, it was just one of those freak accidents that will never happen to you until it does. But she had the panoramic pictures from when I told her to do it a couple years prior. And of course, we walked her through the whole process, got them taken care of. We insured their new house that they built. But she thanked me so many times for being able to use that as a reference to go back to make their life a little bit easier through the chaos that they were dealing with.
Yeah, I can see where, you won't remember because you're so frantic,
Sure.
And, but you do accumulate from when you started more and more stuff with value, so you've got to keep up with that.
Absolutely.
And you mentioned life insurance. Do you write quite a bit of that?
Well, that's one of the things, talking about your home insurance and your car insurance, of knowing what you have and why you have it. Life insurance is no different. Most folks that work for an employer, most employers now offer some sort of a work life insurance program, which is great. I encourage you, if your employer offers work life insurance, get as much of it as you can, because it's typically very, very cheap, if not free, because it's in a group plan with your employer. The only downside to work life insurance is, for most folks, that's what they depend on to take care of their family as a whole if something were to take place and happen to them.
Right.
So again, we'll use round numbers to make life easier for me. Let's say someone makes $50,000 a year as a salary.
Right.
Most work life insurance programs will give them 2 to 3 times their annual salary, which would be $100,000 or $150,000. Now that's nothing to sneeze at, don't get me wrong, but you're going to take $20,000 to $30,000 off the top immediately for funeral cost, because that's what if you have anything other than straight in the box, straight in the ground, anything else, you're going to be in that $20,000 to $30,000 range, which is craziness, but that's what it is. And it's only going to get more expensive the longer time goes on. So again, we'll call it $20,000 right off the top. So now if you had $100,000, you're down to $80,000. Well, what most folks don't think about with life insurance, that I preach this over and over and over again to try to get people to hear me. It's not just losing a loved one or a spouse, it's losing their income that is being brought in by that spouse. Mm-hmm. So we use a husband and wife, for example. Let's say the husband is the one who makes the $50,000 a year. When he passes away, that not only is the husband gone, the income of the $50,000 that he made is now gone as well. And so they spend the $20,000 to bury him and all those sort of things, and dealing with all the other situations that go along with that. But you still have to pay your mortgage. You still have to pay the power bill. You still have to pay your water bill, your cell phone, your car insurance, your car payments. All of those things don't go away, but the income has. And so having something in place, like I said, that's why you have to have a plan in place. And life insurance is one of those things no one wants to talk about it, again, because it'll never happen to me until it does. And then you turn a tragic situation of losing a spouse, a loved one, and make it to where now finances is adding to that burden of dealing with that circumstance.